All right, Big Bang. Today is Tuesday. It is November 15th. Welcome to the Dog Walk presented by Barstool Sports. It's Eddie, it's Chief. We are joined again by Bitcoin Marty. Marty, welcome back. Last time you broke down Bitcoin for idiots. Thank you for doing that. And this time you're going to break down a controversy that's like rocking the world, it feels like.
The end of Bitcoin.
Marty's ready to fight for that.
No, sure. I know. That's what I said. I want to get him triggered. I'm wearing the triggered hoodie right now. Just want to see if we can get him on tilt here.
Well, hopefully it's the end of crypto, quote unquote crypto. Myself and many other Bitcoiners have been trying for many years to separate Bitcoin, which I think is the only signal in the world of cryptocurrencies, from quote unquote crypto, which is filled with a bunch of scams and Ponzi schemes, which FTX has proven to be at the end of the day.
Which you said in the beginning, like that holds strong, that Bitcoin and the other shit coins are two completely different things. So,
here we are.
You're on the mark with that. So. Yeah. Hey, before we get off and running here, I do want to talk about the exclusive ticketing partner of Barstool Sports, and that's none other than the Game Time app, Chief. It's created by fans. It's for fans. The Game Time is a ticketing app that makes it easier than ever to score last-minute deals on tickets to sports, concerts, and shows, and they guarantee the lowest price. If you haven't given Game Time a shot yet, I don't know what you're waiting for. You guys are going to love this app. We've had tons of Barstool fans using it, hitting us up on social about the great deals they're getting. Anything you got your eye on in the coming future?
Yes, because 'tis the season. I used Game Time. The person I got it for listens to this podcast, so I can't say what game it's for, but it's coming up. It was so easy. Got great seats, great deals. So I this is not like it's an ad, but it's not an ad. I love Game Time, and I use it in my real life.
Can you say what it was for, or no?
I don't want to, when does this come out?
It comes out Tuesday.
Yeah, no, I can't.
Okay. All right. All right. Well, we will talk about it in the future because Game Time will be back on the show.
Yes.
So, Chief's Mystery Event. Stay tuned.
Actually, you'll know about it within a few weeks.
I like it.
Yeah.
Download the Game Time app, go to the account tabs, create a login, and redeem code DOGWALK for $20 off your first purchase. Terms do apply. Download Game Time, last minute tickets, lowest price guaranteed. All right, let's get into it. All right, so FTX. Fucking crazy, dude. This dude lost his net worth, 96% of his net worth in a day, was it?
Yeah, and wasn't he worth, like, on paper or on Ethereum or whatever, however you want to monitor, on FTX, I guess, like 27 billion or something like that?
Yeah, I think at one point it was above 30.
Okay.
I think right now he technically has a negative net worth due to all the liabilities that he has personally.
So how can you break it down for dummies? What happened? What is FTX for people that don't know? And just get into everything.
So there's many parts of this story. What is FTX? FTX at the end of the day was, now that it's defunct, it was a trading platform where individuals and institutions could go deposit Bitcoin, other cryptocurrencies, and trade them with leverage. FTX spun out of a fund called Alameda Trading, which is where SBF apparently got his start, and the lore behind SBF and how he got rich in the first place was that he was able to recognize an arbitrage trade between Western Bitcoin markets and Asian Bitcoin markets, particularly in Japan and South Korea. So the story of how SBF originally got wealthy, which I don't really believe, is that he took a bunch of money and basically saw that Bitcoin was trading at $10,000 in the US and it was trading at $10,100 over in Asia. And he somehow set up a bunch of bank accounts over there and was able to move money, buy Bitcoin for 10,000, sell it for 10,100, do that trade over and over again until he amassed millions of dollars. Again, I don't think he actually did that. I think it's been a con game since its inception, but eventually once Alameda, the trading arm, developed a rapport, he decided to spin out FTX, which is a trading platform, and amassed a good amount of users from the institutional and retail client base.
Sorry to interrupt. Shouldn't there be like a paper trail of these transactions where it's like, hey, like that story? I feel like there should be some kind of documentation backing up that story.
Yeah, there should be, and it seems that people at SBF was a very good con man and very good. He was very good at persuading people and was able to basically raise money off this story without having to really show any receipts of making the trades. And I mean, I got the start of my career actually on West Jackson working at a managed futures fund. We did a lot of work with commodity trading advisors who were in the Chicago area. And as an analyst, that's like part of your job is like if you're vetting these funds to invest in, you want to see their trading records and literally particularly the actual trades that they made and the individual P&L on those trades across time. And I don't think SBF has ever shown that evidence with his, they called it the kimchi trade, which was this arbitrage trade.
And if people are, just to follow along to, SBF is the founder. He was the guy who started all this, and he's this geeky guy. Safe to say, he's this geeky guy who like got by on being like, "Hey, I don't need anything. I drive a Toyota Corolla. I'm a billionaire."
He's Mitch Trubisky as a trader.
Yes, he's Mitch Trubisky trader who like pulled the wool over everyone's eyes, being like, I'm going to redistribute my wealth into the world and the climate change and all this stuff.
Yeah,
and so that's how he initially did it. But sorry, just to add more context, SBF is the name of the guy.
I gotta say, I kind of hate that he goes by 3 initials and then the platform is also 3 initials and it's like SBF, FTX, like what, like that's our level of stupidity is that we're getting the guy's initials confused with his platform.
But I'm telling you, to people like who I know, some of like if you're completely out of the crypto, like I've been following a little bit, so I'm kind of, but I know if I was listening from afar and I knew nothing about this and I was just hopping in the pockets of the way SBF, FTX, I'm already lost.
I would think that SBF was its own crypto.
Yes,
it's like its own type of crypto.
Yes,
well, essentially was.
Yeah, well, true. Yeah, well, then they had FTT. Correct.
Yes, exactly. So that's an important part of this story as well.
Right. So why don't we get into that then too?
SBF is Sam Bankman-Fried is his name.
Yeah, we'll call him Sam.
Sam.
Bankman. People should have known.
Yeah.
But back to FTT, the FTX token. So that's been a growing theme over the last 4 or 5 years in the cryptocurrency space. Is a lot of these exchanges will spin up their own native token, which they market, will allow participants in of their exchanges to accrue equity benefits. They'll be able to get some of the profits if they participate with this token. And so that's been a big theme. Binance has one, Bitfinex spun one up, and then FTX spun up FTX token. And FTT specifically has a big role in the downfall of FTX last week. And so basically what happens with these exchange tokens is the exchange will just create them out of thin air. They'll print, I don't know exactly how many FTT they printed, but they printed a significant amount. And the way it works out, they print these things out of thin air, and then the people who spun it up get a lion's share of the token. And then they give a pittance to the traders who can freely trade the float of that token. And so where FTX got caught up particularly is it came to be known that they were illegally giving Alameda, which again is the trading fund that FTX spun out of. FTX was illegally giving them FTT tokens, Alameda FTT tokens. Then Alameda was using those tokens as collateral to take out loans to buy more assets in the space. And so if you remember in the beginning of the year when Luna went down, when Celsius went down, Voyager went down, FTX and Alameda were big players in buying some of those distressed assets or bailing some of those distressed companies out. And it's come to be known that one of the mechanisms they were using to do this was FTX was giving Alameda FTT tokens, and Alameda was using these tokens as collateral to get stable coins or Bitcoin to then buy out these companies. And so what happened last week is the price of the FTT token fell to such a point where the collateral that they used to take out those loans that allowed them to buy all these assets in the space became essentially worthless. And so they became the debt that they had taken out to buy all those assets they couldn't pay it back because the collateral was worth nothing.
Well, is that fundamentally a problem with crypto where you can just so because I don't understand how anybody could be like, we're going to use something that that was just invented as collateral. Like that.
Yeah,
that seems
insane.
like okay. So I'm not stupid, because that does seem, the way you lay it out there is like that should never be allowed. That, hey, we're going to invent this thing that doesn't really exist and has no value, and then we're going to transfer it over here and use that as like, hey, give us real money. And we'll use this as collateral, even though it's not real. That's how it sounds in my brain when you lay it out. Is that accurate?
Your instincts are correct.
Okay,
Chief. It's completely insane.
So then, is there a lack of regulation issue? Is this like just laziness by other, like some of these like VC firms? Like what is going, like how I don't understand how this could even happen. How it seems like step one is like, well, that's worth shit. You just invented it. We can't do this deal.
Yeah, it's a combination of all those things. I mean, Sequoia got swept up in this, which is pretty fascinating considering they're considered one of the blue chip venture capitalist firms in the world, and they were duped by SBF. I mean, they have since deleted their expose that read like fan fiction on SBF and FTX, but if you go back and read that, the archive link's still out there. It is astonishing the level of due diligence that a firm of the caliber of Sequoia was even doing on FTX. And they got completely bamboozled by the lovable autist that is SBF, and just gave them hundreds of millions of dollars that they had to write down to zero last week. And so that's part of it, just people really getting swept up in the wonderkind narrative and archetype, and saying, oh, this guy seems smart, so we'll definitely take care of our money. There's certainly a regulatory aspect to this, which it's a bit controversial in Bitcoin spaces, because Bitcoiners don't want overarching regulation. They prefer, I mean, many Bitcoiners, myself included, would just see this blow up as a consequence of the free market finally accurately pricing in the insanity that is FTX and the FTT token. But yeah, one can make a strong argument that a lot of these exchange tokens and Ethereum even are supposed to be labeled as securities and should have been offered as securities under US law. So many people believe that all these tokens are unregistered securities and should have been illegal to offer in the first place. And that's another big debate that's going in the space. There hasn't been much regulatory clarity specifically from the SEC around these tokens, how they're spun up, how they're distributed, and whether or not they're securities. So this type of activity has been allowed to happen for 5 or 6 years now, because there just hasn't been that regulatory clarity there.
What was like the first thread that, if you're unraveling a sweater and it's like you pull this and everything starts to come undone? Were there alarm bells about FTX like in your community being like there's something fishy going on here?
I mean, I've been calling them out for over a year. And
based on what, I guess?
So based on the fact that it was pretty blatantly obvious, he was going on CNBC like last summer. That's when I started beginning to call him out. I called an interview he did. And in that interview, it became glaringly obvious to me that he really didn't understand the nature of proof of stake and proof of work, which are the two competing consensus mechanisms in the cryptocurrency space. Bitcoin uses proof of work. Ethereum and others use proof of stake. And the big knock on Bitcoin's proof of work is its energy consumption. But if you actually understand how proof of work works, the energy debate doesn't really hold any water. And so the fact that somebody that is supposed to know the space very granularly and have a very tight understanding of it, he proved July of last year, to me at least, that he had no grasp on the nature of any of these things. And then,
well, let me stop you there. Neither do we. So can we get you to refresh us on what the proof of work means again? Because I feel like we talked about it last time, but I personally need a refresher, and might as well do proof of stake too.
So in short, proof of work, you have to prove that you did work to add a block of transactions to the Bitcoin ledger, and somebody who adds blocks of transactions to the ledger gets rewarded in Bitcoin. The way that proof of work mechanism works. Correct? Yes, this is where Bitcoin mining comes in. Miners, what they do is they essentially produce cryptographic hashes, and that takes a lot of electricity, which to produce electricity, you need energy, so it's energy intensive. There's no hiding it. Bitcoin uses a lot of energy. but it's worth it because it's the only way by creating these hashes, and that happens in a probabilistic fashion where you can't game the system. Miners produce a hash or many hashes. The one that finds a particular hash below the network difficulty target gets to add a block of transactions to the network, and they get rewarded for that. So you prove that you do work. You use a lot of electricity. The way the math works, you can be pretty certain that the miner was acting earnestly to find that hash. They weren't able to cheat the system just due to how the math works. Takes a lot of electricity, but what you'll find is due to the economics of Bitcoin mining, miners are forced to find the lowest cost of electricity possible so that they can have positive profit margins. And what you'll find is most miners use energy that would otherwise be wasted or is stranded. So they're using on-grid electricity that's being produced in off-peak hours and is being wasted all the time. So they come in and create efficiency there. And then off-grid, things like natural gas mining with gas that would otherwise be flared or with stranded gas wells, it produces low-cost electricity. But we're getting deep in the weeds here. Proof of work takes electricity and energy. Proof of stake takes capital. If you have the way the proof of stake consensus mechanism works is you prove the state of the chain by actually having a bunch of the tokens. And the more tokens you have, the more control over the network you have. So you stake your tokens and then you validate transactions with that stake. And so proof of stake can be easily gained because people can print money, acquire a lot of tokens, and then become large validators on that network.
And when it's proof of stake, is that tied to another asset like dollars or some kind of traditional? No,
just a token.
Okay, that feels like a problem to me.
Yes, it's a big problem.
Okay,
people have been severely misled to think that it's vital. So going back to SBF, last summer to me it became obvious he didn't understand the nature of these two things. But if you want like a real smoking gun, to me, it happened after the blow up of Terra Luna, Celsius, Voyager, these companies, and when they started buying these assets, and they were publicly going out on this buying spree, and the grocery list added up to be like well over $2 billion. And I tweeted this out, I believe in June or July of this year. I was like, hey, this doesn't really make sense because in January of 2022, FTX announced that they had just closed a recent funding round. They had raised $400 million in January of this year. And I believe they're Series B or Series C. And it just didn't make sense to me that they had just raised $400 million. And yet 6 months later, they were going on a $2 billion buying spree. If you're going to raise $400 million and then go buy $2 billion worth of stuff, that just didn't compute with me.
Hey, let's take a quick break here because this episode is sponsored by BetterHelp. Unfortunately, life doesn't come with a user manual, so when it's not working for you, it's normal to feel stuck. Navigating any of life's challenges can make you feel unsure, whether it's a career change, a new relationship, or becoming a parent. Therapists are trained to help you figure out the cause of challenging emotions and learn productive coping skills, which makes therapy the closest thing to a guided tour of the complex engine called you. Listen, we're talking about financial crisis right now. Mm-hmm. That could definitely be a cause of someone to, grief or tense moments in their life where they need to talk to someone because that's a very scary time in people's lives.
Totally. And I've had my eyebrow specifically twitching out of control for 4 days. And I looked it up, like what could be the cause of that? And it's just high stress. Mm-hmm. So I'm stressed the fuck out. Everybody leave me alone on Twitter. But I think I'm going to use BetterHelp to find a therapist because I think that's the hardest part is like finding somebody you're comfortable with. This kind of makes that a little bit of an easier process. And then you can kind of have some tools at your hand to learn how to navigate your life because life is hard for everybody.
Exactly. It's a great option. As the world's largest therapy service, BetterHelp has matched 3 million people with professionally licensed and vetted therapists available 100% online. Plus, it's affordable. Just fill out a brief questionnaire to match with a therapist. If things aren't clicking, you can easily switch to a new therapist anytime. It couldn't be simpler. No more waiting rooms, no more traffic, no more endless searching for the right therapist. Learn more and save 10% off your first month at betterhelp.com/walk. That's betterhelp.com/walk. Go check it out. It's always a great idea to talk to someone. All
Definitely.
right, let's hop back into the episode.
So I also feel like typically when you go through a Series A, Series B, Series C, and you take on that level of investment, you typically have to give something to the investors. Oftentimes it's board seats or some kind of oversight committee. Was that something that was going on at FTX too? Or are there other people who are just like, that there was a board from these other VC firms that they were just like, oh, whatever? Or like, how many people do you think are culpable? Is it all Sam Bankman-Fried?
It's all Sam Bankman-Fried. That was the one thing. There have been a couple prominent VCs that have come out. Chamath, I'm not even going to try to pronounce his last name right now because I don't know.
The Warriors owner guy. Yeah.
Yes, he came out and said they did diligence on that round. In the first call, it didn't really make sense to them, but they followed up with like, hey, if we were even to begin to think about participating, here's a couple things we'd want to see. We want to see you build a board that's not just you and the founders, which is what the board is right now. And we'd want you to do a couple other things to get us more comfortable in our diligence process. And they returned the call and said, you can fuck off. So they don't have a board with investors on it. It's very insular.
And
so
it's
they
like,
were allowed.
The insular board is like super, like people, well, it's all accusations, right? Like, but there's a lot of like strange things that people say are going on in the Bahamas and shit like that too.
There's a lot of weird polyamorous stuff going on.
Oh, really?
Yeah.
No, I didn't know that.
Yeah, supposedly like there's like an orgy mansion in Bahamas. Like I don't. Oh, this is all hearsay too, and this could be like when shit like this happens. Like people
they buy
come
little
with,
St.
like,
James
shit.
or something.
No, not like that. It's not like that.
Yeah,
but
We're not
like,
too far from it.
But it's like it's just a lot of.
Okay.
I don't know. All alleged.
Yeah, the story is
all alleged.
10 of the people who work at FTX now meet to live in the same mansion. They're all jacked up on amphetamines, doing weird sexual shit.
Okay.
Yeah.
This is going to make a hell of a Netflix doc.
Yeah, that's what.
Yeah.
That's what everyone's saying.
Yeah. So like what is happening kind of in real time? Like, so what are the processes now? Where is Sam Bankman-Fried, SBF, is he going to have to face some sort of legal ramifications? Like, is there, like you said, because it's not necessarily deemed a security. So it's like, does the SEC have power?
Well, do we go over like what made it all crash down too? Like what was the thing that made this all happen last week, or was it 2 weeks ago, where it just everyone tried to withdraw
it felt
their
like
money,
it was like
right?
a run on the bank. Yeah. So I guess like what caused the run on the bank?
So again, it goes back to the FTT token. So what happened was CZ, who is the founder and CEO of Binance, which is the largest cryptocurrency exchange in the world, he made a public tweet in the beginning of the week saying, hey, we don't feel comfortable holding these FTT tokens. And they were one of the largest holders of the tokens. And he publicly announced that he was going to begin selling off Binance's share of their FTT tokens, which tallied well over $500 million, I think. And so he had announced that he started selling. So the price of FTT started falling, and more people who had FTT tokens started basically following CZ in that trade because they didn't want to get washed out. And again, going back to the point I made earlier, once FTT fell below a certain point, a certain price, all the collateral value that they had when they were using FTT as collateral for those loans collapsed and basically made them unable to pay a lot of their liabilities. Is the way I understand it. Again, there's so much fuckery here. It's hard to know exactly what it was.
Well, it sounds a little bit like the housing crisis in 2008, where you had all these people invested in all these assets that weren't really worth what they were necessarily trading for. And then when that kind of came out from under them, the whole system collapsed. Like there was more. Exactly. Okay. So that's what caused it. What are kind of like the next steps? Like for SBF, you said they're down in the Bahamas doing orgies on meth. Who has jurisdiction there? Are some of these investors, are they going to be able to be either like bailed out, or is this going to fundamentally change how crypto is looked at and traded in the future? I think I asked you 4 questions. You can answer any one of them.
So a lot has happened since last week. Number one, I believe it was Saturday night. Somebody hacked FTX and what was left on the exchange and moved a bunch of the cryptocurrency that they had left on the exchange off. So apparently they lost like $600 million more of cryptocurrency on Saturday night. They're positioning it as a hack, but many people believe it was insiders moving funds. Like we're talking like crimes that are beyond comprehension from like these people could be some of the biggest scumbags in the world. But what are the ramifications moving forward? FTX does seem to be a systemic risk in the overarching cryptocurrency landscape. You had a lot of token projects, you had a lot of hedge funds, you had a lot of lenders that were custodying their assets with FTX. And so they have been affected by this, where they actually don't have access to their assets that they were custodying with them. And so a lot of companies, BlockFi, which is a company here in the United States, didn't have all their assets with FTX, but and a good portion of them, they don't have access to that. So that affects their ability to run their companies. Again, a lot of these token projects park their treasuries on FTX. So now they don't have access to those tokens. And so some of these cryptocurrency scams, even though they are scams, like they can't even try to scam people right now. And then in terms of legal liability, yeah, I mean, I think this guy should go to prison for quite some time. Since U.S. customers were affected, FTX did have a U.S.-based exchange, FTX US. So I do think United States will have some jurisdiction over this, especially since American citizens have been affected. American businesses have been affected. But yeah, as it stands right now, it's not really clear what's going on in the Bahamas. There were rumors that Bahamian authorities detained SBF over the weekend. I don't think they've been confirmed. But the one co-founder or the CEO of Alameda, this girl Caroline, apparently she escaped to Hong Kong and is trying to get to Dubai to evade extradition. So yeah, there's a lot of fuckery right now.
Yeah, but it's also hard to know what's actually true with that and what's not, right? Because I've seen that they're trying to go to. I forget exactly where, but there's Dubai, that they're exactly, that they're trying to go to all these places. And there's this clip actually of her, Caroline, she's the CEO of Alameda, like you said, and like the way she talks about, like I think they asked her like what's her worst trade or something, and did you see that clip? And,
what's your risk management strategy?
Yeah, and like her answer and the way she talked about it, like it was like if someone asked me, and like for someone to be in an executive position, it was like jaw dropping. Yeah, her answer. Like, go watch that clip. I don't know if I have it right here. I'm gonna play it here. If we gotta take it out, take it out. But
I think those aren't absolutely could pull it off without my math degree. Use very little math. Use a lot of like elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. I'm trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
Yeah, I don't know. It just seemed like that, like, you know, like
Jesus.
Eddie, but that right there, like a stop loss limit. Like if you have any rudimentary like understanding of trading, like stop losses are fundamental in actually managing risk. Like if you make a bet and it begins to go against you, you want to make sure you have stop losses in place so you don't blow your whole load. That's the other thing. Like I don't want to get too conspiratorial, but the obvious like incompetence of the Alameda and FTX team is hard to fathom. Again, considering the investors they got in, the fact that they were able to name the Miami Heat Arena, Arizona State Serena. They got Tom and Giselle swept up in Steph all of their Super Bowl commercials. Steph Curry, they had their patch on the MLB umps throughout the whole playoffs. Like it's something stinks. I don't know what it is, but I don't know. There's something that stinks the high heavens with this whole.
And that is the thing that it almost makes me. You know, I do have a bit of a conspiracy brain. If you've listened to this show, you probably know. But it's almost like, how could these other investors not be part of it? Because anybody who would sit down with them and ask them very basic questions would be like, wait, what? Like that? Like, how can that be the CEO? And she can't, and like you said, she doesn't understand what stop loss. Like that seems to me like a giant red flag that any professional investor who is willing to give them hundreds of millions of dollars would be like, hey, actually, yeah, we're not going to be doing business with you. We're not going to be investing.
I mean, again, going back to my days in the managed futures industry where we index commodity trading advisors, that's like one of the first questions you ask as an allocator is, what is your value at risk strategy? Like, what do your stop losses look like? Like, when do you decide to close out a trade when it goes against you? Like, those are some of the first questions you ask these people. So it's astonishing that they were able to raise as much money as they did.
There's something that stinks about that. Is I mean, it's just.
I'd also be interested. I know their HQ was in Chicago for a while until they moved to Miami. Like, certainly these people at the ground floor, like how they're working on it, like, you know, what it was like for them, if they kind of had any, like, obviously, they, like, if you kind of know what's going, they didn't know, obviously, top level, but it's like, this is kind of strange, you know? That's who it sucks the most for, right? The people who just are like, holy fuck, like, their job just got pulled out from under them. And obviously the investors who lost all their money. That sucks too.
Yeah. No, there's a weird connection to this philosophical movement called effective altruism too. Like SBF was a very devout adherent and public adherent of this philosophical movement. And the leader behind that, Will McCaskill, he had his hands in FTX and sort of groomed SBF and got him off the ground. And if you do some research on the history of effective altruism and their motivations, it is a bit weird what they
this doesn't seem very
pontificate
altruistic
about. No, not altruistic at all.
Yeah,
their whole goal is to get a bunch of money in a Robin Hood like fashion and dedicate it and allocate it to goals that they think are virtuous, and then just commenting on the philosophy there, like values are subjective. Like these people think they know what's best for the future, and there's a case to be made. Yeah, nothing's clear right now, but maybe this was just like a ploy by this philosophical movement to try to completely fuck up the world.
Now, do you think as a Bitcoin, like I would say that you're a Bitcoin zealot, do we even need a trading platform like FTX?
No, I don't. I mean, I don't think so. I mean, unless you like it, all these trading platforms in my mind are just gambling sites where you can try to make money off the volatility of these different tokens and play arbitrage and liquidity games to try to eke some money out. But again, it's all noise to me. Bitcoin, funnily enough, like Bitcoin's reason to tot is to get away from this type of speculative action because you're actually able to save money. You don't need to go speculate to attain yield to outpace inflation. Like the best strategy is to stay humble and stack sats, buy Bitcoin, move it to a wallet you control, and just save money over time. That's the whole reason Bitcoin exists, is to be able to do that and then transact in a peer-to-peer fashion so that you can't be censored by despotic governments or corporations who don't like what you think or say.
Well, and it's funny you mentioned Robinhood because it does it feels similar in a way where it's almost like they're like the trading that is going on it's almost like a Robinhood, or who was the Ken Griffin behind what's his firm?
Citadel.
Like, is that where they're getting a little bit of like they're a little bit ahead of it and they're taking like a piece off of every trade? Like that's the model, right?
Oh, with FTX, I mean, it's becoming glaringly clear that they were trading against their customers as well.
Yeah.
They were able to use Alameda's trading horde, their treasury, to essentially spoof trades, and they could see where all the stop losses of their customers were, and actually use their funds to drive it below that so that the exchange would benefit.
Well, and
above it.
This was like another thing that I don't know if this is true or not, but I read this somewhere trying to get ready so I can at least ask you some sort of intelligent question. But their head of compliance was a guy who was running a poker site like 10 years ago, and they would have employees who could see the full hand before the bet and would bet against it based upon like basically like, I know what you're holding. We're going to play this, like, you know, and we're going to play it. And they stole millions of dollars. And that guy was head of compliance for that poker site. They stole millions of dollars and got out of Dodge. And then he came back and got the same job here with FTX. So there's like, it might have just been like this insidious, fraudulent thing from the jump.
I think it was. Yeah, I believe his name's Dan Friedberg.
Okay.
Compliance guy.
Yeah.
Well, any market that explodes, like, it just kind of seems like there's going to be like some people that try to find ways to get in.
Do you think that this will impact Bitcoin and crypto going forward? Like, people will be like, oh, like, remember that? Or is this something that's going to be like, you know, dust in the wind eventually, and then things will settle?
No, I think it's definitely going to have a severe impact. And I could see it going a couple of directions. I think number one, the whole quote unquote crypto space is completely destroyed. I don't think any institutional investor is going to feel comfortable investing and deploying capital into crypto and speculative crypto projects for at any time in the near future. I hope never again, because again, I think it's all noise and it's all scammy. The next question is, does this instance make it clear that there is a very clear distinction between Bitcoin and crypto? And that is yet to be seen. So there's two in this scenario. There's two paths I could see it going. You could see, yes, investors begin to wake up and say, hey, Bitcoin's the signal here. Everything else is noise. If you've been following everything Bitcoiners have been preaching, and the companies that are being built on Bitcoin, they're much more secure from a first principles foundation. They're really encouraging self-custody and using Bitcoin's native properties to make sure that user funds are where people say they are. That could be one thing that happens, that people wake up and say, all right, Bitcoin is certainly different. We have to treat it like a completely different sector than this crypto bullshit. Or another thing that's probably likely, if I'm being honest with myself, is that this just leaves a shit stain on everything, and Bitcoin gets dragged down with it, where people just associate Bitcoin with this fraud and stay away from it until further point in the future. So I do think crypto's destroyed. Bitcoin's going to be fine. The question is whether or not it could be a long bear market and a long climb out, or it could be a short one where people realize like, oh, this is a signal. But regardless, Bitcoin's going to be fine.
Would you say that Bitcoin is like akin to gold, where these other cryptos are more like a fiat currency?
Hell yeah. That's better than gold, but yeah,
okay.
That's a good, sure.
Better than gold. Yeah. Okay.
So even Ethereum's pretty fucked?
Ethereum's completely fucked, yes. It has been since inception. I mean, Ethereum is the mother asshole from which all these shit coins come out of.
But you'd always hear Ethereum is like, oh, that's like the one where like...
Because that's a platform too, isn't it? Isn't that a trading platform? Doesn't it have an element of that?
Ethereum has made it easy for anybody to spin up their own cryptocurrency. That is the use case that they came out of market with. They want to create a world computer, and they're essentially trying to create a world where you have bartering tokens, and it just really doesn't make any sense. Ethereum's not decentralized. It will never be decentralized. They just transition from proof of work to proof of stake at the end of this summer. And essentially what happened there is once they moved to proof of stake, all the large regulated exchanges can offer the best deals to stakers. So what we've seen is a lot of Ether holders give their Ether to these large regulated exchanges so they can get higher yield on their staking returns. What's that done is completely centralized the supply of Ether and therefore the validation of the network into these regulated entities. And so in terms of evading an attack from the state and becoming censorship resistant, Ethereum is completely fucked, because if transactions begin happening on that network that the government doesn't like, they're just going to go to these big exchanges and say, hey, you can't validate these transactions. Then the whole reason for this thing existing in the first place is completely destroyed.
So overall, as a diehard Bitcoin guy, it's fine, but it's bad for the business because of the connotation it's going to give all coins. But in the long term, Bitcoin will be okay.
Long term, Bitcoin will be okay. I think this is overall good because lessons are good. Market's learning, lessons are good, and right now the market is learning that Bitcoiners have been preaching the right lesson all along. Like, hey, don't gamble, don't trade on leverage, don't get caught into the siren calls that are these other cryptocurrencies. Simply buy Bitcoin, using it as a savings vehicle or a way to transact in a peer-to-peer fashion. Hold your own keys, and run your own full node to further distribute the network. And yeah, I mean, it's a massive advertisement for Bitcoin, why it exists, and the message that many Bitcoiners have been preaching for many years.
Bitcoin is up today, so I don't know, and up over the last 5 days since this has really been taken off. So I wonder if it's like happening in real time. What you're saying, like people are starting to realize that.
Oh, I guess my last question too. What any concern with these other platforms that are left? Like, is there going to be,
Yeah.
Is there a way to short these other markets? And which ones?
I mean, the big one on docket right now that people are talking about, another one that has gone out with a very suspicious, massive marketing spend is Crypto.com. They had a Super Bowl commercial. They're all over the UFC. They have their own exchange token, CRO. It seems that they may be in trouble as well. Yeah, I don't think the contagion event's over. There's a few Asian exchanges that people are worried about. Again, BlockFi here in the U.S., they got caught up in this. There's rumors that Genesis Trading, which is based out of Connecticut, they had significant exposure to Alameda as well. And they've been a stalwart in the industry for almost a decade now. There's rumors that they may be in trouble. So yeah, I don't think it's over yet.
Is this an isolated thing? We keep saying this. Last question. Is this an isolated thing, or has crypto gotten so big to the point that it can negatively impact the entire economy?
I don't know if it's the entire economy yet, but when it comes to FTX particularly, there was a couple of pension funds that put many hundreds of millions of dollars in it. The Ontario pension fund, I believe, put $200 million in. And so they had to write that down to zero last week. And I mean, that can begin to have a material effect on the individual pensioners in that fund. Then that could have a cascading effect in that local economy. But it's not, I don't think it's quite systemic risk like the 2008 housing crisis, but it's beginning to eke its tentacles into more traditional investment vehicles like pension funds. So for those individual pension funds that were stupid enough to invest in FTX, they're certainly going to be feeling it.
Okay. Well, that sucks.
Yeah. Well, all right, Marty. Thanks so much, man. Where's the podcast at and everything like that? Your handle's Marty Bent.
At Marty Bent, you can find podcast TFTC on a podcasting platform. TFTC.io is the website. You can find the newsletter. If you're looking for legitimate Bitcoin companies that aren't going to lead you astray, I am a partner at a venture capital firm, 1031. Go to our website, 1031.vc. Look at our portfolio companies. These are companies that I'm comfortable putting my reputation behind. Not to pump the porcos here, but I do think it's important to get people into good services. So you can see that stuff there as well.
Awesome. Thanks a lot, Marty. We really appreciate it, man.
Thank you, guys. It's always a pleasure.
Yeah,
it's nice to see you.
Is. Yeah, definitely. And I would like to say there's still probably a lot of shoes to drop here with this FTX story. So everything in this podcast was alleged. Thank you for listening. We'll be back tomorrow. We will see you tomorrow.